The U.S. Treasury 10-year yield hit 3% on Tuesday for the first time since 2014, but is gold shrugging this off? Joining me today is Frank Holmes, CEO of U.S. Global Investors. Frank, welcome back.
It's great to be in your New York studio.
Yes. So let's talk about the gold market right here. You know, I mentioned the 10-year Treasury yield right here. Why isn't it moving the gold market?
Well, I think gold is actually doing exceptionally well in context of the markets hitting 10-year government bond hitting a 3% yield, because it triggers all these asset allocators and fund flows. So it's risk on, risk off. And you see in the stock market all of a sudden unraveling 500 points. And a lot has to do with allocation of fund flows between a 10-year, a 5-year, and a 2-year, and stocks. A risk on, risk off type of model. And I think that that's a big factor. And also, I'm so surprised the dollar isn't actually screaming higher. Why do I say that? Because in Japan, the 10-year bond pays you 5 basis points. You mean the U.S. is paying you 60 times more on your money? Germany, it's like 55 basis points. So you would think that Germans is 25 times greater yield here. The euro should be getting clobbered. No. So I think the dollar is actually pivoting well.
Well, you mentioned screaming, and I hear a lot of gold investors screaming because they want the metal rallying more so here. We're getting a bit of a pop here as we speak right now. But, you know, some are saying, you know, with equities down today and with the geopolitical landscape that we're living in right now, why is gold not rallying more so here?
I cannot tell you why it's not rallying more. I personally think it's doing exceptionally well. It's above the 200-day moving average. The 10 years hitting 3%. Last time I did this, it's below the 200-day moving average. It's flirting with the 50-day moving average. So anything here, and I think the CPI numbers are going to be higher.
Okay.
And I think that that's going to all of a sudden pivot that gold trades higher. So I remain bullish and constructive.
And what's interesting about you, Frank, is you're one of the few people that actually enjoys in being invested in gold and Bitcoin at the same time. You're a big fan of the cryptos. You're getting a bounce back here as we speak, rallying over 9,000 now. What do you make of Bitcoin?
Well, I think the journey of me going into that space, when I discovered the original early buyers were actually gold bugs, and they didn't sell their gold to go and jump into Bitcoin. They just diversified. Like they say, you should diversify with stocks and bonds and stocks. They diversified into Bitcoin. I think the bounce basically came after the tax. A lot of people had to sell coins for the taxes. The previous two big sell-offs took place for meeting with the Senate, meeting with Congress. I think probably we could get another modest correction. We'll have a run here till mid-July when the G20 finance ministers, the cartel of global synchronized tax and regulation, they're coming out with policies on cryptocurrencies. So I remain very bullish, and you're seeing more and more people from Goldman Sachs getting into the trading of the cryptocurrencies. There's lots of constructive news that's out there.
So do you think that, you know, new gold products emerging on the scene should take, you know, some lessons from Bitcoin, or what, you know, what's the way to attract the younger audience back into gold?
The millennials they had their Tinder, and I laugh about it, and people, is a quick date, yes, no, open an account, Coinbase, 10 minutes.
You've been saying that. It's just
it could take you 3 weeks to open an account if you in America. So you're talking about they're not going to digest that long time period. So they think differently. But what's really happened with all these ICOs, some of them are really bad. There's no full, true, plain, and timely disclosure. I think that that's what they need. But I think what they really have to recognize, they attracted $5 billion of money that would have gone into speculation for new technology, gold exploration, oil exploration. It's just pure speculative money. But what I think is going to happen, and when it happens, like the GLD sucked out $50 billion of gold, I think when they finally figure out a cryptocurrency that's collateralized by gold, it's accepted all around the world, trades 24/7, you're buying 1 gram of gold, I think it absorbs 50 billion ounces of gold.
But you can't just tokenize gold, though.
I think they're working on it. Someone will figure it out, because a millennial wants something to trade 24/7, not 9:30 to 4.
So I was speaking with some of the guys over at TradeWinds yesterday, and they were saying we're probably sitting on one of the greatest transfers of wealth. We'll see millennials inherit huge sums of money. Do you think that they'll be using it for gold one day, or they're going to stick to
I do. As I mentioned, when you get that coin that's finally accepted, and there was talk of the CME and the Royal Mints in England of having a product to come out that would be a gram of gold, when that finally gets papered, it takes off like
All
the
right.
GLD ETF. Now the other part is which Josh Crum and Roy Seabag has come up with Mene Gold, where you're buying 24. That's very disruptive to the gold jewelry business. You can buy online like Amazon 24 karat gold jewelry, average trade $600. They're right through break even. In only a couple of months. So millennials will buy gold that's 24, it's beautiful.
Right, it's wearable gold.
And they'll buy it back from you if it falls 10% below the market. And so
Wearing your investment.
you're wearing your investment. And that's what the young coders that are Chinese women here that have come from India, that are living in America, working in America, they have a cultural affinity, 40% of the world's population, towards gold.
All right, Frank Holmes. We'll see you next week on the road, Gold Game Film.
Yes.
And thank you for watching. We'll be back tomorrow.